Hi there, I'm Dara McDermott and you're watching Dukascopy TV. Well, I have a regular guest back in our studio today, Michel Girardin. Welcome, Michel.
Hello, Dorian.
Now, we're going to have a look at some news regarding the ECB. Now, Benoit Coire, he recently said, if money market rates are not moving, I don't see a reason to act. Now, what were your thoughts on his commentary?
Right. Yes, he came here to Geneva when he said that, and Benoit Coire is one of the 6 executive board members of the Council of the ECB, so he really is at the core of the ECB action. And when he said that, he was referring to a problem of heterogeneous Eurozone. In that he said, for instance, when the ECB brought interest rates down from 1.25% to 0.5%, which is the current level, he noticed that there were different impacts on the regions. For instance, in Germany, this reduction of 75 basis points in interest rates led to the banks reducing their own rates by 100 basis points. So they were even more aggressively easing monetary conditions than the ECB. But on the other hand, in Italy, banks only cut rates by 50 basis points, meaning there can be some tensions in money market rates reflecting the different quality of the credit of the banking within the Eurozone. So when he says this, Benoit Coire is referring to the problem that different countries have different policies. So this is why the ECB has come with the so-called LTRO, which is long-term refinancing operation, whose aim is to help banks which may have difficulties in providing credit to the real economy, because that's the ultimate game. So basically, when he sees that money market as they are now are not volatile and not bouncing all over the place, it means that he is happy with the current monetary policy stance of the ECB.
Okay, and he did say if the recovery falters, now they could actually cut rates. Now, do you think we could actually see the ECB pulling out the big guns in order for them to stop the Eurozone from heading backwards?
Indeed they will. I'm pretty sure they will. They will ease interest rates again. They are currently 50 basis points, and they will probably bring them down to 0.25. Which is a cut by half. So it's quite big. The ECB, unlike the Federal Reserve, does not have a specific target for employment or the real economy, if you prefer, in its mandate. The Federal Reserve is the only central bank in the world that has a dual mandate for both maintaining price stability and also ensuring full employment. At the ECB, they only focus on inflation, but the trick they use, the way out of this single mandate, and so to help the economy, what they say, is that they will keep interest rates low or even bring them lower if they see that inflation expectation, not inflation itself, but inflation expectations are trending downwards. And the current trend is down. And they see that inflation expectations are coming down. So it means for them that interest rates have to stay low or even go lower. So I'm pretty sure that they will ease interest rates again.
And he also said yesterday that the ECB is expecting a contraction and only very small growth of 1%. Now, are you also expecting this? And what will you be closely keeping an eye out for?
Right. Yes, this year GDP for the Eurozone should be contracting by 0.4%. And next year we're expecting a modest recovery. The ECB is expecting 1% growth. I'm a bit more cautious than that. I only expect 0.7%, 0.8% growth. Mm-hmm. Basically, I think the recovery is there, but it's too early to call a victory on the recession. I think recovery is there, but it's fragile. It rests on one-off factors. I was referring earlier on to the fact that inflation has been trending down. This has given a boost to consumers in increasing their purchasing power. That's one factor, but it won't last forever. The second factor is that companies have stopped destocking, so that's also proving beneficiary to growth, but that's also a one-off factor. And the third factor is that public finances fiscal policies have stopped improving. So there was a hard push, especially led by the Germans back last year, and Angela Merkel pushing for austerity type of measures. And this year she's lifted the foot off the austerity pedal, if we can say that way. And so now fiscal balances have stopped improving. And so we see that these are all three factors which have helped growth and should help it going into next year. But these are temporary factors.
Okay, and we have a nice picture here of Mr. Draghi. Now, in July of last year, he said that the ECB would do everything to save the euro. Now, what are your thoughts? Do you think they have been doing that? Has it been successful? What's the future of the euro?
Right. This is a fantastic speech by Mario Draghi. And it shows that sometimes words are more powerful than facts. He said we'll do everything we can to preserve the euro. And he added, believe me, it will be enough. And the markets got scared. Many people who were betting on the implosion of the euro suddenly, and they were shorting the euro, suddenly had their neck broken by this statement. Interest rates, that bond yields that were 7% for Spanish bonds, 6% for Italian bonds came down sharply and now are navigating between 4 and 5%. So since that speech, markets have really said, okay, now we trust the ECB will do everything it can to preserve the euro. Now, when I spoke to Benoît Cœuré this week, when he came to Geneva, he said, he told me, markets have been listening to Mario Draghi, but they have maybe not paid enough attention to the fact that he was adding, we'll do everything we can within our mandate. Mm-hmm. So it means immediately, when I asked him, so do you think that these so-called tail risk of the Eurozone are off the table? Because markets were focusing on that. By tail risk, we mean implosion of the euro. And he said, well, it depends basically on government policies. You know, if they're back, as I was saying earlier, to saying, who cares about fiscal balances, you know, and balancing the budget, you know, where interest rates are at 4.5% in Italy. Italy has no incentive, the government, to bring some structural adjustments to reduce the debt, which is the main problem of Italy. If the rates go back to 6%, then they do, because servicing the debt costs a lot of money in Italy when it's 120% of GDP. So Draghi and Benoît Cœuré was correctly pointed out, saying we'll do everything we can within our mandate, but I'm pretty optimistic that the ECB, if it sees this so-called tail risk re-emerging and fears that the euro will implode, they will be back acting with the so-called OMT, which is a technical thing called outright monetary transaction. It's a bit like the quantitative easing by the Fed, with a difference that the bonds that the ECB buys to keep interest rates low, they are sterilized because they don't want the impact on the money supply. Unlike the Fed, which is not sterilizing their purchase, there are 85 billion purchases of treasuries and mortgage-backed securities. So all this to say, in conclusion, in a nutshell, recovery in the Eurozone, but fragile. ECB clearly determined to do to make sure that we don't fall back into a recession. They look at inflation expectations to act. They will act more, and they will bring interest rates down. And if needed, if at some point these tail risks re-emerge on the euro, they will be coming with another plan to outright monetary transaction to help keep bond yields at their current low levels.
Okay. Well, thanks, Michel, for sharing your views on this speech. And thank you very much for coming in. I'm sure we will have you back in the studio very, very soon.
Thank you, Daria.
Well, that is all for right now, but do stay tuned to Dukascopy TV and do have a look at all our other interviews with Michel Girardin. And as I said, we will be having him back in the studio very soon. Goodbye for now.